The network, working with one of this year's fastest rising cryptocurrencies, has been restarted after having problems validating transactions via a Twitter account run by the Solana project. With everything you need to know on this massive crypto news on the future of Solana, we've put together the following video. Number 1. So, what's the big deal? The issue stemmed from resource exhaustion in the network that caused denial of service. One tweet from the Solana status account said last week, third parties that validate transactions on the blockchain elected to coordinate a restart of the network, the developer team said later in a statement. Solana's validator community successfully restarted the network, according to a Twitter post, and Solana's status page showed a major outage of more than 17 hours on Tuesday, and then another major outage of 9 minutes for Wednesday, though it was indicating all systems operational as of about 7:15 a.m. in London. It has some interesting technical features, but realistically, Solana hasn't yet been fully tested in a live setting. What we're likely seeing is the experimental nature of blockchain tech playing out. The price of Solana has more than doubled over the past 30 days to trade at $164.10, though that's down from a high around $211 just last week. It's up more than 30,000% from its low of 50 cents in May 2020, and with a value of about $48 billion, it's the 7th biggest cryptocurrency. The issues meant that other crypto protocols built on top of the Solana blockchain had problems connecting to the network. That includes Pyth, one of the highest profile applications, which feeds DeFi projects price data on stocks, cryptocurrencies, and other assets sourced from some of the world's biggest trading firms, such as Jump Trading Group, Virtue Financial Incorporated, and DRW Holdings LLC. Next up, what was the aftermath? Since the epic event, Solana was down nearly 8% as of last week, and people are showing mixed reviews of the crypto returning to its once prosperous standing in the market. According to various Solana block explorers like Solana Beach, the majority of transactions that were attempted onto the blockchain have failed. Data shows that while there were intermittent issues as early as a week ago, that failure has now grown to become widespread, with barely any transactions being successfully written to the blockchain. The Solana Foundation said that the validator community had decided to commence a restart of the network, and instructions on the restart would be posted to its Discord server shortly. Georgios Konstantopoulos, a research partner at VC Fund Paradigm, speculated on Twitter that part of the issue came from the spamming of the network of bugs in order to exploit a bug that would reduce transaction fees. Others on Twitter were skeptical that the protocol, which launched earlier this year, would be able to handle institutional-grade traffic should it crumble at any point of limited use. Solana Labs CEO Anatoly was undeterred on Twitter, inviting Solana validators to get on the blockchain's Discord to discuss the next steps. Number 3, what actually happened? According to a detailed report, the network outage was a result of Great Protocol's IDO, which launched on the Radium exchange in the early hours of September 14. While trying to manipulate the rules of the IDO, several traders used bots to generate limitless transactions, causing the Solana blockchain to experience a memory overflow. Since Solana's mainnet is still in beta, it lacked prioritization of network critical messaging, which caused it to start forking and slow down transaction processing. What the project thought could be fixed in a few minutes lasted for hours, as the continuous forking caused several validators to crash and the network subsequently went offline. All steps to resolve the issue, including a proposal by the validator community to restart the network at its initial stage, did not yield any positive results as transaction volume continued to surge. Upon successfully diagnosing the problem, the community proposed a hard fork, which requires at least 80% stakes to come to a consensus before the upgrade can be implemented. The consensus led engineers to write codes from their various locations across the globe to mitigate the issue before the network was fully restored in about 18 hours after the lag started. Commanding the efforts of its validator community, Solana noted that the development further buttressed the benefits of blockchain over centralized networks like Amazon Web Services, AWS. According to Solana, when decentralized blockchain entitles experience outages of such magnitude, the validators are individually responsible for recovering the state and continuing the chain without relying on a trusted third party. The consensus of the community helped Solana to bring the network to its right state in less than 24 hours. However, when similar technical problems occur on AWS, users will have no option but to completely rely on the company to solve the issue, which may most likely take days, if not weeks. The benefits of blockchain cannot be overstated, with the technology empowering cryptocurrencies tremendously and being widely adopted across a variety of sectors, including finance, health, and politics, among others. Also, what's the future hold for Solana? The Solana protocol, SOL, has been specifically designed to facilitate decentralized application (DApp) creation. It aims to improve scalability through the introduction of a proof of history consensus combined with underlying proof of stake. On September 22nd, the Solana-powered decentralized finance platform Orca raised $18 million in a Series A funding round. This DEX platform announced that it had secured the funds in an investment round with Polychain, Placeholder, and Three Arrows co-loading the fund. This is an investment intended to jumpstart their path towards making Orca the best swap for the Solana ecosystem. Additionally, they have $300 million in total value locked (TVL) onto the platform. On September 23rd, the decentralized fund management and investment protocol Solrise Finance and decentralized identity firm Civic Technologies both partnered with Solana. The partnership was designed to help launch the first Solana-based decentralized exchange with permissionless access. This enables institutions to jump into decentralized finance (DeFi) due to the fact that normally these institutional investors cannot really join because of the need to comply with regulations. Through this permissionless DEX, a parallel ecosystem is achievable, which means that they can get access to DeFi, while still meeting all of those requirements. With all of this in mind, we can expect a heightened interest in the SOL token, which is Solana's native cryptocurrency token, which has the potential to bring its value up high. On September 24th, Solana SOL had a value of $135.94. To get a better idea of what kind of value point this is for the token, we'll be comparing it to its all-time high value as well as performance in August. In terms of SOL's all-time high value, it was on September 9th, where the token had a value of $213.47. Here we can see that the token was $77.53, or 57% higher in value at its all-time high when compared to its value on September 24th. When it comes down to August, the lowest point of SOL was on August 3rd, where the token had a value of $32.91. The token's highest point of value in August was on August 31st, where it raised its value to $125.95. Here we can see that the token increased its value by $93.04, or by 282% throughout the span of August. With all these developments within the Solana ecosystem taking place, we can expect the SOL token to increase its value to $183 by the end of September 2021, making it more than a worthwhile investment moving into the month of October. And finally, what other crypto scandals happened last week? Now, there is solid proof that the NFT industry could also fall into a scandal. More people believe that NFT management is a must. Specifically, this scandal talks about the recent incident at OpenSea, a peer-to-peer NFT and crypto collectibles marketplace that took place on Wednesday, September 15th, 2021. On that fateful day, the Twitter community feasted on one account's tweet, where they alleged that one of OpenSea's head of product, Nate Chainston, fell victim to insider trading. The issue? Well, it turns out that it was entirely true. Now, OpenSea, or the eBay's of NFTs, seems to be in the midst of quite the scandal after admitting that one of its workers traded digital crypto assets using platform insider information. As a result, NFT backers are reminded that despite the promise by major players, NFTs remain a speculative asset. Therefore, casual collectors will need assurance that the system is not rigged in favor of insiders. In a blog post, OpenSea appeared to accept the occurrence and wrote, "Learned that one of our employees purchased things that they knew were set to display on our main page before they appeared there publicly." However, the corporation did not identify the employee but stated that an immediate review of the situation was being conducted. The business, which was recently valued at $1.5 billion after raising a $100 million Series B round from Anderson Horowitz, stated in an anonymous blog post that the situation was extremely disheartening. The company's CEO tweeted that they are running an internal inquiry and are committed to doing the right thing for OpenSea users. According to OpenSea, the staff is now explicitly prohibited prohibited from using proprietary information to purchase or sell any NFTs, whether available on the OpenSea platform or not. This entire fiasco, along with the Solana processing snag, has taken over the crypto headlines for the past week and also introduced the question, does NFT need regulation? NFTs are digital assets that represent real-world items. They're not interchangeable and they're very different from cryptocurrencies, which are fungible tokens. In the wake of the unfortunate inside trading at OpenSea, there is demand from some crypto investors that they should be regulated to safeguard their interests. However, it's still too early to say whether that will happen anytime soon, since cryptocurrencies are feeling the heat from regulators and NFTs still isn't even on their radar. And with that, it wraps up the video. Thanks for watching.